One of the most anticipated numbers out this morning in the pre-market, CPI for January. We've been waiting for this number. It comes out and it's a miss. 7.5% year over year for January versus 7.3. Markets don't like that. That aside, we're going to give you some ideas in this video, guys, on how we can trade anticipated economic releases because they come, it seems like, weekly these days, guys.
Well, in this environment, certainly we're going to have, inflation numbers are going to be big. We got CPI today. Some of the jobs reports will be interesting as well, certainly. That's just how it's going to be because they can signal Fed action. So the question you have to ask yourself is, if you're trying to trade the actual release, just remember when the number comes out, the algos are hitting it so fast. Like that, actually making the trade, trying to get the direction, it's all well and good in theory, and everybody wants to be able to capture a move like that in the NASDAQ. You see that morning, but you're probably missing a good portion of it if you try to hit it. So the question becomes, what do you do after? If you're looking at the overall futures, you can always look back to what is previous support, and that liquidity vacuum comes back in at a key level. Where can you maybe pick up a reversal? I tend to think, in the approach that I was looking at today, was to just have to have your levels mapped out ahead of time on key individual names that you know are likely to move on that. In this case, growth, semiconductors, AMD was one that I was looking at. And then say to yourself, unless you get a turn, unless you get to trade off of the exact price that you're looking for, then you don't have to make the trade. In this case, I wish I had more that I had liked, but AMD had thankfully put in a gigantic trading range the last 2 days between a previous key resistance level around this 128, breaking out yesterday, making a fresh high, then failing on that high in the pre-market on the number, so that when it came down, all I had to do was know that I wanted long off that price. And then just to add to the execution on the trade, when it came to 128, it broke 128, made a bottom right here about 30 cents lower, went to the upside, even made another test at the bottom, put in a higher low, and then I didn't even get in until it retook 128. So it broke the level once, went a small amount, came back, rejected the move back up, and then held a higher low. So some price acceptance in that area. I'm like, okay, it's not cratering through there, it's trying to stabilize. Now we'll go into the long trade. And you had to wait this out because at 8:30, this number, it took until 9:09, it was 39 minutes later, when it finally made that bottom. And from there, you retrace the entire move. But the key was I knew that level going into it in advance, trying to pick up the short, unless you already had that stop in and that was your idea. Always tricky to do, but sometimes if you're patient enough, you can always just go the other way.
Yep, and that's, pretty much exactly what I was going to talk about, is just preparation. And I think that you guys know us well enough that that's something that you have to look out for every single day. And part of the preparation is honestly just understand, and I have DraftKings up here, and I think you got to understand what your portfolio is. So forget about day trading or anything like that. And I know we're a day trading show, and that's what we're talking about. But if we just take it back to a little bit of a larger look, like DraftKings, they're not going to do well, if inflation's running crazy, and we know what that means for the Fed and for interest rates, and Neil just talked about this. So here it is, you don't want to be in a position when it comes out because you don't know what's going to happen. Look at DraftKings. Here's 23.65. It drops all the way down to basically $1, 22.50. $1's a decent spot there before the market opens, and then it starts going back to the upside. But if you panicked, so forget about key levels, forget about anything like that. I can show you on here a Palantir or any of these high-fly names, a TDOC, anything ARK. We could even call up, let's just do the ARK quickly here, ETF here. So look at the ARK ETF, and that was a 20-minute chart. So look at this. Here we go on ARK. Same thing, right? I didn't prep this. I just knew this was going to happen, right? ARK down. Look, if you're in this name, why be in it if the CPI number's coming out? Sure, if it's better, maybe it rips, but we all knew that we're expecting inflation to hit. So look at ARK, $77 all the way down to $73. $4 there on 70, something you didn't need to lose. And now if you didn't get out, you didn't lose it. But why not wait for it to bounce? If you like ARK, wait for it to make a bottom. You know the number's coming out. And then look, right there, just as the market opens up, it goes right back to flat. So my point is not only understand key levels if you're going to scalp and make some intraday trades on it, but you may want to look at even your long-term holdings and be able to rework a couple bucks here on a couple of these names just as it comes out. Get get out and then even reload lower and take advantage of that. It's a slippery slope, but hey, that's one strategy.
Have a plan. Have a plan and have a plan if you didn't already have a plan. We say it a few times around here, but that is the biggest part of being prepared, guys. Make sure you have a plan.